Let's get some more on all of that. We're joined now by Chris Weston from IG in Melbourne. Chris, good to see you there. I just wanted to ask you, because we did see that China data out over the weekend there in terms of the house price rises, really a paring back of those really bearish concerns about China and that playing out in some of those markets.
Yeah, I think it's a real reflection now that the Chinese have changed their mantra with the housing market. Recall about 5 or 6 months ago they were looking to have a tightening bias on the housing market. That has changed to more what they call a stable and healthy market. Now we saw 69 out of 70 regions actually recording decent house price gains, and Shanghai and Beijing had some very, very good double-digit gains in terms of new house prices. These results coming out on Saturday. So that was that was a big positive to see, even though they are looking still for cooler house prices, or the rate of gains to slow down a little bit. One thing we did see was the pace of foreign direct investment into China actually slowing down to about 14% on the month. That was the previous month was about 20%. However, the Chinese authorities have been coming out recently saying they are looking to I suppose, create new ways of innovative free trade within China for certain regions, mainly the Shanghai region. So that's going to be interesting to see how that's been taken. There's a lot of controversy in China in the last couple of days, namely the price action that we saw on Friday, which was really, really crazy stuff, because it was a pretty quiet afternoon, and then we saw the Shanghai Composite pop about 6%, the slightly smaller index, the CSI 300, 7% or so. So that was really very, very interesting to see what was going on there. And Everbright Securities having a malfunction with one of their arbitrage systems. So that won't do anything for confidence into the back end of Friday, and certainly we'll have to see how that market trades today. But we have seen risk assets relatively flat this morning. I mean, Aussie dollar's pretty much unchanged. In fact, in the currency space, it's dollar yen which has had the biggest move up, probably about 20 pips today. So everything in terms of risk assets, Dow futures, the currency markets, commodity markets, all relatively flat, and I think it's testament to the relatively low amount of news flow, or hard-hitting news flow, we've seen over the weekend.
So what does that mean then? What's your call for the ASX 200 at the open?
We've got, I think what's the interesting thing, the market will also face a 20.5 point headwind today. I mean, Telstra and CBA, the clear ones there. CBA paying a $2 dividend, so that $2.85 include the franking. Telstra with its 14-cent dividend, 20.5 points coming out of the market. So we're just looking for an open just below that 5100 level. Whether it can hold that level for the rest of the day is yet to be seen. Of course, we've seen a huge raft of earnings that's going to be very much in focus this whole week. The Nikkei looks like it's going to probably hit to the lower to the point about 50 points or so. Dollar yen's a little bit higher, as I say, but we were talking about their trade balance numbers today. And of course, we have to see how the Chinese market fares when that opens at 11:30, given the lack of sentiment, or the loss of sentiment, that the Everbright flash crash has caused. But yeah, just below the 5100, Brody, is where we see the market opening today.
We're just seeing the numbers there from Dexus as well on the bottom of the screen. 514.5 million for net profit there. The final dividend 10.5 cents. Just wanted to get your thoughts on a couple of the big ones that we've had through already. Amcor there and the BlueScope numbers. Have you had a chance to look through those?
I think the BlueScope may disappoint a little bit. The stock's up 58.5% year to date. A lot of that has been driven down to short covering. If you look at the short interest in the stock, we've got about 2.3 million short interest in the name. You go back to June, that was around about 9 million. You go back to 2011, that was about $119 million worth of short interest. So a lot of those gains have come out, have been short interest, and I think a lot of that has been premised on the fact that we are going to see some remarkable earnings growth into 2014. The market consensus for next year is 162 million. The question investors need to be looking at this result today and saying, are we going to get that 162 million? Because that's really what the short covering has been premised on. And it's got to say that there will be some sceptics out there who suggest that's going to be quite tough going. I mean, the currency, the fall in the Aussie dollar has certainly helped them, and that's what's made it relatively achievable, I think a lot of people would say. The net profit for today at 29.62, or 29.62 on the underlying number, you want to look at the underlying rather than the reported number, is it's pretty much in line with expectations. But the revenue numbers, I think revenue was about 6.5% below where the street was looking for. And I think that could be a little bit of a concern. I think all divisions were perhaps just a touch under. But it's their rhetoric about the outlook which I think is going to be interesting. They said that the first half of 2014 would be very similar from 2013. And we did see some earnings growth, sequential earnings growth coming through. But will it be enough? The market's going to be questioning to see that 162 million being achieved. And price action today will pretty much determine whether the market believes that's going to be the case. Amcor. I think Amcor's numbers are pretty good. I think the earnings numbers were slightly better. Revenue numbers were okay as well. So revenue numbers were about 1% below. Earnings numbers, if you look at the net profit on an adjusted basis, were just above where the market was looking for. And I think that's thematic of what we've seen earnings season thus far in Australia. 50% of companies have beaten earnings on the EPS line, but only 30% or so have beaten on the revenue line. And I think that Amcor falls nicely into that box. So I think the stock's done very well this year, up 32%. It's been a big currency play. They've talked about it in the results themselves, saying that every 1 cent drop in the Aussie dollar helps them by about 3 million. Every 1 cent drop in Aussie euro drop helps them by about 5 million. So it's been a good currency play. Defensive earnings, 95% of their sales go to defensively structured businesses. So it's a great stock in this market. And I think this is going to be relatively well received by the market, especially with the really strong cash flow generation that they've got and the improvement in net debt as well. So I like the Amcor results. I don't see anything that suggests that we're going to see 5-6% or anything like that, but it looks like a solid result. Whereas BlueScope to me may well see a bit of sellers on market given the good gains that we've been seeing. But of course, you have to go through these things with a fine-tooth comb and see exactly what the outlook is suggesting there.
And we're just still waiting for Bendigo and Adelaide Bank. What's your expectations for that?
Well, Bendigo's had a good performance as well, 24%. It's trading on a mild discount to the Big Four, but it usually does, to be fair. Cost growth. We're going to look for about that 3% cost growth. Net, if you look at the cash earnings, something like 346 million is what the market's looking for as well, and dividend around 31 cents. So it's again, are we going to justify these earnings coming through? Because that's really what this earnings season has been. The big thematic is if you've seen a stock that's done very well, they have to justify the increases that have been having to go, that have been coming out. So. Only up 24%. It hasn't shot the lights out by any means, and you'd expect it to do slightly better because it's a higher beta play than the Big Four. But yeah, we'll have to see when that comes out. But cost growth and asset quality, especially in their rural division, will be very interesting today.
Yeah, absolutely. Chris, thank you so much for that. We'll speak with you throughout the session.
Thanks, Brodie.
Chris Weston there from IG. All right, let's just bring you across some more details about what we're expecting in that Bendigo